right, wonderful. Thank you, Jennifer, and welcome everyone to Wealth Mastery for Women. This is session 19, and this is angel invest and venture investing. And we have some very, very esteemed women joining us. We have Julie Castro-Abrams. She is the CEO and founder of How Women Lead, How Women Invest, and How Women Give. It is a wonderful organization that I have been a part of for 3 years, and it really has helped me understand and accelerate also my journey as a venture and an angel investor. And also Tracy McWilliams. Tracy is somebody I want to be when I grow up. I consider her my dear friend and mentor. I've known her for over a decade. And I originally met Tracy when I was at a startup raising capital for that startup, and she came in as an investor. So she is an angel, she is a VC, she is a family office. And so I am just so pleased to welcome you both to this session. And it's going to be done in panel style. So I'm actually going to take the screen down here in a couple of seconds and just begin this panel. This, unless Tracy or Julie, if you want to say a little bit more about yourselves, we can do that. But I'm going to stop my screen sharing so that everybody can enjoy this panel. So welcome you both.
Thank you. Just thrilled to be here. It's exciting to be able to talk about venture and also talk with women that are interested in investing in venture. And it's just, I'm thrilled to be here. I love mentoring women. I love mentoring founders, and I love the venture space. So very excited to be here and chat with both of you. And I also am a big fan of Wealth Mastery and both of you and your careers.
Thank you.
Well, I'm jazzed to be here as well. And I just want to say, ladies, this is our time. Never before we had the opportunity, the operational expertise and experience in the way that we have today. And my whole story is like, let's make it count to make the world we want to see.
Absolutely.
Amen. I love it. Yes, that's so true. And you've done so much work, Julie, yourself in terms of what you even do is lobbying in DC from, that standpoint too. So thank you for really putting money where your mouth is and action where your intentions are for all of us.
Yeah. Well, so to get us started, we can talk a lot about the due diligence aspect of venture and angel, and we'll get into this. The first thing that I wanted to start with was, why is it so important that women even learn about venture? Maybe we don't have to invest in venture right away, but why is it so important for women to enter the space of angel and venture, both for themselves and also for the way that venture capital is currently deployed and what's how we want to change who deploys it and where it gets deployed to? So Julie, do you want to start with that?
Sure. Yeah. So I just want all of you to just really think about, what are the companies we all consider, the big companies that, when you think about where people will go to work, what are they? Like Google, Uber, Netflix, all of those big high growth companies that are really ubiquitous and really, not only employ tons of people, but really have an influence on the American culture and direction. All of them were backed by venture capitalists in their high growth stage. And so when you think about, look at Uber as a good example of a company, huge, one of the largest in the world. I think at one point it might have been the second largest company in the world. That company was started by a young man who wasn't, when you're young, you only know what you've been exposed to and what you've done, right? Bright guy. But whoever was guiding him in the building of the company culture and the different parts of the company were not helping him at all, because he went astray and created a culture that was not good. And he got fired. The attorney general came in, did audits. It was a massive problem for investors and for employees, for anyone who was in that ecosystem. So when you think about a company like that, if you had more diversity of leadership around the table as venture capitalists, helping to guide that young leader who was so bright but had such an interesting idea, but to do it in a way that wouldn't be, have so much crises over time. Everybody in that equation might have been better off. So my point to you is, we need to be at the table where the cultures and the jobs are being set for the future. If we're not there, We're going to continue to see these hostile cultures that are making women sick, that are excluding us from leadership roles. So to me, this is absolutely essential for the future of this country. If we continue to concentrate all the power in the hands of, a small percentage of people who all look the same, white guys from Harvard and Stanford is what a lot of people think about when they think about venture capital, right? If we continue to see that the culture in the future just with that one type of person, but our country is in 2045, it's no longer majority white. This is now our country's, complexion is absolutely going to be transformed. Think about the implications if we do not get more diversity, also culture, race, ethnicity in those early stages. Anyway, that's.
I just, I'm going to provide a general overview. I think what Julie said was very interesting in where we are in venture. Venture has changed a lot, but if you think about companies like WhatsApp, ChatGPT, Spotify, and Instagram, what do they all have in common? They didn't exist 15 years ago. So when we're talking about venture and how important venture is, founders come from all backgrounds, all diversities, every which way, whether they're young. There's a lot of founders now that are older founders. And, when people are moving away from risk in venture, they look at founders' expertise. So there's a combination of what's going on in the founder space that is very dynamic and constantly changing. I'm a third generation entrepreneur. So I have grown up working in a family business. I understand the entrepreneur space. And with entrepreneurship and innovation, it's really important to be able to access capital. And venture is the earliest dollars in capital that goes in, not that they don't go in later, but they also go in to support support founders on their journey. I think venture is important because it creates innovation. Now, the venture market has changed completely, but the reason it's important is because the trend is now away from the public markets. And I think investing in private alternative assets is the trend in the marketplace because it is what creates wealth in the United States. And when I'm talking about alternative assets, I'm talking about venture deals that Julie mentioned, actual transactions that we just talked about, the WhatsApp, the ChatGPT. Those are actual companies, but it's real estate, which I know AdaPia, Jennifer, you've actually done. You've done wealth mastery on this, but this private transaction is where money is going. And that's what's really important here. And women need to be at the table investing in private alternative assets to really build wealth over time. How they do it and how they due diligence it, I'm sure we're going to get into now.
Yeah. And I would definitely say, I think it's really important. We try to talk a lot about the fact that what we get taught is how we grow our money is basically our 401k, some sort of diversification, meaning stocks and bonds. And it goes so far beyond that. And to do it comfortably and safely as women, the more we converse with each other and the more we connect with like-minded individuals who have background, expertise, and track record, the safer we can feel as we go into making these moves, which, right now the 1% gets to do, right? But that, as we learned with one of our panels with Ellevest, that 97% of wealth is in the hands of white males, to your point, Julie. So this is where we start to learn not just what venture is, but if we're going to engage in it, why, and also most importantly, in my opinion, because I'm risk management, how to do it safely, how to really not get taken, blindsided, fooled, how to discern. And so we can dive right in. I would love to hear some of your founding principles. And AdaPia, I think you wanted to ask them. I know you had a couple of really great questions you wanted to ask them to get them started.
Yeah, I think we can dive into the due diligence. It brings up a lot of why also we created WOW is in our experience too, and something that I've really enjoyed with how women invest and how women lead is that there's an open forum for the limited partner. So limited partner being the person who invests their money, the general partner being the people who manage and select investments, right? And so as a limited partner, most of the time, and especially in anything like mutual funds, which is a different structure, but you just, there goes your money and somebody will tell you at some point if you've made a return, maybe, or you can check the stock market to find out. With this model, and even in venture most of the time, you don't get to participate in knowing where your money is being invested. And maybe that's fine for large institutional investors, but I think for a lot of women, we're really curious because we're so hyper intelligent and we want to know and we want to participate because why not? Because we're really smart. And so I really think that having that open forum model that you have for the LPs is helpful also not only to the selection of companies because there's a collective IQ, but also to the LPs themselves to feel like they're participating and that they're learning something. And that's some of what we do in WOW, not in venture investing because we don't invest directly, but what you do. And so I'd love for you to speak on why you chose that model and like what the experience has been also for other LPs.
Well, so How Women Lead's a nonprofit organization, and we are all about getting women access to opportunities, either individually or collectively, breaking glass ceilings together. We decided in 2020 to put a venture firm together, which is a separate entity, but really it was all by and for the women of the How Women Lead Network. Our mission is both to make great investments and make money, but also to give a pathway for women to start investing. I really believe that, and we've done research to learn what it takes for a woman to cross the line and start investing in this asset class that's generally been hostile is sort of an appearance to women, right? And so we decided we were going to create a very interactive opportunity for people. And literally every month, we will bring at least 4 companies for all of our investors, our limited partners, to get to meet when they do their initial pitch. You get to ask them questions, and you also get to sort of give the, I think we should do more due diligence or not. So, our intention is to give people an eye into the process, but we have really good guardrails where it's like, you're not making a final decision. We're taking this under advisement. And if you have expertise and you want to contribute directly to that founder, whether we invest or not, we make those connections with the founders as well. And so I think for people, even people who really like the idea of doing direct angel investing is a kind of investing where you are investing directly in that company. You have to evaluate it and sign legal documents yourself. But we even created an environment that you could do that if that's what you wanted as well.
Yeah, which is really great. And Tracy, I would love for you to speak a little bit on angel versus venture, because you've done and do both, and just your experience on the angel side, and then how maybe that parlays more easily for people into the venture side as an LP, given the time that it would take to properly diligence a company.
So I have invested in a lot of early stage, and we're talking seed stage investing, seed and Series A personally. And what I found, and we're talking about on the diligence side, is it's always the team. You could have an incredible idea and nobody's done it ever, and you can be right there. But if you can't execute well, or you don't have the right pieces of your team to be able to execute, then it's like, that's the most important thing I look for when I'm investing in early stage seed, because the idea is important, but people don't realize execution and being able to take that idea from start to finish is the most important aspect of investing. And so I think the shadow part of venture investing and angel investing really has to do with people don't understand these are businesses people are growing. And so when they're starting from scratch, it really is being able to take that business. And even through this period of time where businesses were shut down for 2 years, it is the founders that were able to take those businesses and continue to run them and continue to grow them in a time where we didn't expect a whole economic downturn or a shutdown. And so I always look personally, when I'm investing in early stage companies and seed stage Series A companies, at the founders. When I'm sitting across from them, and it's more than just one meeting. I love ideas. Ideas are brilliant, but can you take that ideas? And Julie, you were talking about Uber. I think they were really cutting edge in the beginning when they actually had the idea to basically They were called Uber Taxi or something like that in the beginning. And then they were doing this ride share, and they're like, wait, the legal and compliance issue is to allow us to operate is under the taxi medallion section. So all of that, when they were able to move out of the taxi section and create their own ride share, they then were able to scale because they didn't have regulatory requirements. But the problem is, as they scaled, they created a culture that wasn't really solid as they scaled. So this is what's important. It's the team. And to me, it's like they have to be able to execute. They have to be in line with how you see your value system. And can they implement and, focus on your value system? Now, regards to venture, it's really important to find funds to invest in. For example, I know Julie has a fund. I have a fund on the fintech space. Julie has a fund also in a number of different investments. She's on a third fund, and we're doing a large fund in financial technology. It's important to look at those founders. Are they looking out for you? Are they going to make investments that are important in this space? So from my perspective, due diligence is important on the idea. But the people that are investing are the most important, I think. And I've done it on the fund side, and I've also done it on the angel side.
Oh my gosh, I couldn't agree more with what you just said, because if you have never run a business, it's so much harder than you think. So if you are going to try to trust someone with not that much track record, you're basically risking your money so much. In venture, my experience has been like, at the end of the day, if they want to, they can just run and go to Mexico with the money. And there's very little accountability because you have to then get involved with legal, which costs a fortune. So the character of the individuals, the track record, I think is so important to hammer home here. We've seen a lot this year of a lot of fraud in the venture space. And unfortunately, typically, you'll see men who are easily getting $800 million thrown at them. And we saw with FTX, we saw so much money just being thrown at these individuals, and the character isn't there to store the wealth. So track record can be an indicator of the kinds of choices a person makes every single day, so that if they're ever squeezed, the juice that comes out is good juice, not rancid juice.
Jennifer, I don't know. I think that the examples of really grotesque fraud are very few, but bad leadership and bad management, there's many. And so there's a lot between like someone who runs off and takes the money and goes to Mexico and somebody who just doesn't know how to manage their finance department and runs out of cash. You don't have any cash, I don't care how good your product is, you can't survive, right? So I think that there's so many parts of it. And I think, to me, venture, I've run a bunch of companies, but a venture-backed company, having those responsibility to investors, having to manage a cap table, understand when you go for your next round of financing, how to negotiate it, which kind of investors you should accept. Those are all, it gets really complex. And you have to know so many different parts of that, the whole system. It's not just being a good manager and having a good product. There's so many other pieces to it. And as women, because only 2% of venture funds go to companies founded by women, a woman has to be 10 times better. Well, more than that. She literally has to nearly be perfect, and work extremely hard and pitch more than men do. So women entrepreneurs who can get venture funding and grow a company. So, I salute them all, because it's hard.
Oh, absolutely. Absolutely. That's probably why it's better for us to be trusting in local and in community-based organizations, because there's so much accountability and there's a lot of vetting that has to go into being able to even be presenting an opportunity. I agree with you about the fraud being somewhat rare. For me, I come from a background in products where there's no chance of that happening. So it was a big eye-opener for me when I started participating in venture to understand at the end of the day, whether they flee with the money or mismanage it, you can literally lose everything at all, which is why it's so important, to the points you two are making, to really dial in. You might get 200 opportunities in front of you, maybe 4 are safe for you to try and risk the money. And that's where the vetting is so important.
Yeah, and a little bit around what Julie and Tracy are saying too is, let's say on the side of the venture manager. So now let's talk a little bit about if somebody wants to be a limited partner and they want to invest, because again, I think the statistic is only 8% of all assets under management in the whole world of trillions of dollars, only 8% is managed by women. So that's also part of the problem, is who's managing the money. And so one of the things that really impassions me is helping all women everywhere with this idea and the actions around mastering their wealth. And that includes investing in women-led funds, right? I also don't have the time to be an angel investor. I've done some angel investing and it's just taken so much of my time, because me by myself with my small check, I can only get so far, and I can't push and I can't put guardrails in the same way that a venture fund can put in guardrails. So I really shifted my focus away from individual angel investing into, I want to invest with people who have a system, who have a process, who have everything dialed in and are making those selections. And thankfully, and this is a lot thanks to, like Tracy, who starts a fund, and Julie, who has this 10,000, it's called the New Table campaign. So we want to get 10,000 women to invest. And so let's talk about, let's say maybe vetting, or how do you interview a venture capital firm? Like, how do you do that? And maybe also talk a little bit about the thematics. Tracy, you have a fintech fund. That's one of multiple myriad verticals or industries. So I would love to talk a little bit about that, so that people watching and listening can think, okay, if I want to invest in venture, where do I start? Who do I talk to? And how do I talk to them?
Yeah. Well, I think so. We did this research project to see what's important for women. And so I think what I hear is most important for women is the values of alignment. And so I would just say, first and foremost, what do they say about their work, and what are they investing in? And is that aligned with your values? That could show up as, I want to invest in a climate fund, or I want to invest in a financial technologies fund that is going to solve financial issues in the financial systems. It could also be, this person really wants to address a gap in venture funding for women, for example, with my fund. So first, what are their beliefs and where are they investing? Then, what is their track record? Can you see a history of their investing? Can you look at also the background of that person who is the general partner or leading the firm? And then I would ask questions, especially for some of these more legacy funds. How many women CEOs are in your portfolio? Asking them about their own due diligence and research process to see how they're making sure that that these companies are ready for investment. So I'll let you take it from there, Tracy, but that's sort of a first start.
No, I think that's an excellent start. I mean, the fund that we founded it's all women who have an expertise in technology and financial technology specifically. And so it's really important to take a look at what you're investing in. Not only is it important to invest based on your values, but it's important to invest based on your vision and your time frame, and determine what's important to you. For example, healthcare and financial technology really are more than 50% of the venture market. And so people don't realize that healthcare, med tech, any kind of new technology, that could take a little while for actually it to come to fruition. But when it does, it's a pretty large exit, depending on what your team is and who your team is involved with that. So it really depends on not only the team, the time frame, and the vision. Financial technology is important because what we're focused on is gender equality, and actually making it important for women to be able to invest across the world, really. And gender equality is very important. It's part of the United Nations sustainability focus. And so having women invest in financial technology is important from that perspective, because it does create more of a fair, stable field for women to invest alongside of other LPs. And so it's really important. And financial technology also has faster exits because the market's moving so fast. But product development and investing in product creation is also a great area, especially if there are well-known brands that are creating products and they're raising money from a venture perspective. And so across the board, I know, Julie, you invest in a number, we've had this discussion in different areas, and I'm focused on fintech for several reasons because that is my team's expertise, but love for you to just talk about the areas that you're investing in, because I think it's important for people to understand as they decide where they're going to put their money.
Yeah. So for context, a venture capital firm will set up a fund that's 10 years. And so you make investments in the first 3 to 5 years of that fund. So there's actually a moment in time. And as you guys know, we go through downturns, we go through all kinds of cycles in the world, right? Right now, there's a cycle where there's massive investment. I think there's $356 billion that the federal government is trying to deploy in climate solutions and you think about like climate technologies before the next administration, before this presidential administration wraps up. And so this is a huge opportunity. We have a number of investments in climate companies that are even better investments because they're getting what you call non-dilutive grants, an investment where you take some ownership of a company, dilutes the value of the company for whatever, for the founders and maybe the other investors. So getting a grant is a huge win for everybody and can help companies grow much faster. So it's an example of, a generalist fund gives you an opportunity to look at what's happening in the market that makes the market particularly interesting and opportunistic to make an investment that could have bigger financial returns. So hopefully that's interesting data for folks.
I would love to, AdaPia, Jennifer, I'd love to talk about valuations and why now is the time for women to invest in venture.
Yes. Yeah, that's exactly. I was hoping that we would go there because there's just so much going on right now, and we can get technical too, because this is a wealth mastery class. So if we want to talk about down rounds and inside rounds and things like that, and like, what does valuation even mean? I think it's really important because it's that element of venture that is so much different from going and getting an SBA loan, and how the SBA will evaluate a business for a loan versus how a venture capital firm will do that.
Yeah, I think it's really important. And the reason it's a great time to invest in private alternatives and in venture and angel is because valuations, given what had gone on in the banking crisis, which is Silicon Valley Bank, First Republic Bank, and a number of other banks we're not going to cover here, but I know you have in Wealth Mastery covered that, is that valuations, that's how a business is valued. It's a combination of cash flows. It's a combination of what money is actually put in from venture. There's a lot of caveats to how a business is valued. But the bottom line is, there has been in 2023, early 2023, there's been a 53% decline in the value of these businesses. Now, they're right now between Series Seed, Series A going up, Series A to Series D, there's been 30 to 60% decline in the value of these businesses. So for example, if a business is, let's say it has cash flow, it's valued in the market at 10 million, that is now valued in the market at 7 million. It's the same business. And so these values have been crushed because the capital markets are very tight, and being able to get capital into these businesses, they've had to lower the value of those businesses to attract investors. And so it's something that's really important now in the marketplace. The later rounds on investing, and these companies are cash flow positive, they're already growing, they already have a number of customers. We have seen 60% decrease in the value of those businesses. And it's the exact same business. So as I was saying, 76 billion in the first quarter of 2023 went into venture funding. Now, of that, you have to take out 16 billion because 10 billion went into OpenAI and 6 billion went into Stripe. So that is the amount of money that's been going into venture is probably down 60+% this year. So it's a great time to invest because there's opportunities. Just like in the mortgage crisis, it was a great time to invest in real estate because you have to have the ability to put that money in and hold it. But there's a huge opportunity in venture right now.
Yeah, you think supply and demand. I think that's the easiest way for me to think about valuation. Also, when venture capitalists have less money to invest because they haven't sold their previous companies, that means they're going to pay less money for something that would have had the same value a year ago. So that's when, if you get in, then it's like when the market's down and then all of a sudden there's an upswing. So a year from now, our hope is that, and history tells us that things are going to rebound. So this is the moment to definitely double down on investing. And I just think for all of us, if you think about it, it is such a power play to play in the venture capital space. It actually changes how people react to you for your next job, for that next board opportunity, to be able to communicate just enough about the venture space and to say, I invest in venture, likely gives you another way to show your value to that opportunity, and also shows that you're a player, you're more strategic in the marketplace. And many people take a second look at people who are investing in venture. So I think it's both a great way to make a lot of money with, as Tracy described well, but it's also a great opportunity for you in your own career development and your own power influence.
I was on a call this morning with a tech company, and they have a woman in part of their tech company that is their technical person with regards to building out their tech and their tech software. And we were talking about private alternative assets and combining different technology softwares. And she said, well, I have 15 private alternative assets that I've invested in, and I'll give it over to, and so she was so proud that she had invested in these private companies. And that's not necessarily her background, but it was just part of her strategy. And she's been at this company for a long time. She's had a history with them for 20 plus years. And to see something like that, and to know in her mind that these companies are growing and they're building as she's going on in life, it's nice to have that diversity. If you pick well, it is really nice to have that diversity, because you're part of all these businesses that are growing, and you're growing your assets as well. So.
And that diversity is sort of the decision making that you might want to think about. If you have enough time, expertise, money, and ability to negotiate, and even have, especially if you're a lawyer, you can negotiate terms. You may want to build your own portfolio as an angel investor, but you want to think about it as a portfolio. It's got to be diversified because any one company or any type of company can be impacted by a market. When you invest in a venture firm, you get diversification, and you also, of course, 10 to 30 companies maybe in one venture fund portfolio. You could, put $25,000 into that venture firm and own a small piece of all of those companies. Again, diversified. You also get the benefit of a professional team of people that is both sourcing, evaluating, negotiating, and monitoring, and helping those companies get to an exit. So that's what you want to think about when you think about like the difference between angel and venture investing. It's a trade-off. With a venture firm, you're generally a little removed from, as we heard AdaPia talk about a minute ago, you're a little removed from the founder. So that's the trade-off. You might want to ask at venture firms, or they all function differently. You might want to ask if that's important to you. Would I have any exposure to or interaction with the founders or during the due diligence process? But then as an angel investor, you actually can have an opportunity potentially to get really involved in that company. My experience as an angel investor, because I've got many, is in the beginning, you have a relationship and you engage. Once they get the venture capitalists in and others, they really, unless you're just adding extraordinary value and continue to, you have less interaction. And I've even had situations where it's like, excuse me, I haven't been getting updates. You didn't drop my $10,000 from the cap table, did you? Like, that's like, hey, you guys, like, may not have been a lot of money, but it matters to me.
I love that you said that. I love that you both are saying diversify. So we had a Wealth Mastery for Women webinar early on where we talked about building a garden. And you don't want to just grow tomatoes. You don't want to just grow tobacco, right? A garden has different fruits that are bearing or vegetables at different seasons, different tempos, different climates. And we're really trying to get everyone to understand this sort of financial IQ that we can create collectively through conversation and dialogue, understanding the difference between, let's say, all these different fruits and vegetables, right? So venture, it's really important to know it's not going to be an immediate turnaround, right? If you're going to be investing, you have to be thinking of it as almost like, well, I'm buying a fruit tree. It might take 3, 4, 5, 6 years before it's going to really yield peaches. You got to be willing to see the time it takes for it to yield and know that that's a piece of your portfolio. And I love that you started to talk a little bit about numbers, Julie. I was interested to see if you can share for the group, because there's so much diversification now in the ways we can engage in venture and angel. There used to be a time where you had to have 50,000, 100,000 minimum before you could even really consider yourself someone who could do venture. But I'm seeing a model now where it's much more accessible, in part thanks to you and all you've done. And you too, Tracy. What are some amounts a woman, let's say she's working, she's making 150K a year, she could reasonably consider would get her an opportunity to start participating in venture in the right place?
Well, there's a couple sides to that question. So one is there's actually a definition by the Securities and Exchange Commission in the United States of an accredited investor. That's basically a line in the sand that's pretty arbitrary, like most things, because it all depends on where you live, how much your income, how far your income goes. But they're saying if you make $200,000 as an individual or $300,000 in your household for income, or if you have $1 million in assets, let's say your retirement funds outside of your main residence, either or, right? It doesn't have to be all three. That's just a line where the federal government has said, we think you have enough resources that you could put your money in a longer term investment like a venture fund where you can't take the money out tomorrow if you have a crisis, right? And so you have to meet that standard. There are some exceptions. Probably not worth talking about here, but there are some exceptions, and there's a new crowdfunding law. So there's a different kind of a tool in crowdfunding where it actually has a different standard. So you can look into that if you don't meet that accredited investor standard. But for the most part, most venture funds don't ask you to do any proving that you meet that standard. You just self-attest. Yes, I'm an accredited investor. Great. Now, the next part of your question is for yourself. How much is appropriate for you to invest? And I think it's super variant depending on your life stage. I'm 55. My kids are adults. They have their own jobs and apartments. I'm absolutely in savings mode for my retirement. So my whole name of the game right now is asset building and retaining. So for me, I'm going to make longer term investments a priority because I'm not going to start taking out retirement funds for a while. Still, that's a different life stage than somebody who just bought their first house and might be having their first baby. You got a whole bunch of unpredictable costs that might be coming up for you. So, or somebody who's much older than I am, right? So you just kind of want to, a financial advisor might be able to help you think through it, but you want to think about how much is going to be comfortable for me to put away and know that I don't need it. And it's almost like when a family member asks you for a loan, you're like, all right, fine, here's $5,000, but I know I may not ever get that back, and I'm certainly not counting on getting that back. Anyway, so a little bit of that mindset, like I'm going to put this in this investment vehicle, and if I make a lot of money, yippee. And, I was at a Morgan Stanley event not too long ago, and I'd always thought it was, alternative investments like this generally are 5 to 10% of your portfolio. And they were actually saying 22%. Now, I think that is widely, maybe that's for people who have, maybe you had to have $25 million to invest your money in that Morgan Stanley group, and that's why they said it. So it just varies dramatically. And I'm not giving any investment advice on this call. I'm just giving you information that I've heard.
I appreciate that so much. And we're going to open up to questions, I think, soon, but I do want to share one piece of this is it's okay to risk. It's okay to make mistakes. And women can feel so paralyzed by the fear of getting it wrong. And one beautiful thing about people like you, Tracy, and you, Julie, is even if a person decides that they're going to take something they can risk, and invested in women who are moving the needle, the beautiful thing is, even if it fails, which no one hopes it fails, even if you get it wrong, even if it disappoints, you move the needle for yourself and other women by paying to play. And I'm not saying go ahead and discern very little and throw your money into just anyone. I mean, I'm saying discern. We try to create that forum here. WOW does this in our community with the supporting membership community and the mastermind community. And all the women in this group are just women who are so incredibly ethical. And you've learned some amazing things from some of the masters here in this room about how do you discern. That said, you have to be able and willing to give yourself that space to start getting it right or wrong. You don't have to get it just perfectly. And women tend to expect themselves to have to get it perfect before they can move or act, and that's one of the things that's held everybody back. So with that, I'll step off my soapbox about it.
Well, I think it's really important though, too, Jennifer, because there's this part about getting it wrong, especially with money, because we're so wired towards safety as women and we're caretakers of everyone and everything. And so for us, the loss of money hits harder. And, there's this new report out from UBS that shows that even when women, and a lot of women are primary breadwinners, that there's a lack of trust from their partner about their ability to make investment decisions or money decisions. And I've been speaking to a lot of people, a lot of women who invested in some private alternative assets over the past couple of years. And, those assets aren't doing that well. I mean, a lot of people know that the real estate space, just like the venture space, is kind of hurting right now due to interest rates. And what I've heard that really crushes me is that their partners are really upset at them.
Oh.
And I don't know how to mitigate that. And that's a topic for another time, but this is to go along with what Jennifer's saying, is that, there's two parts to it. There's also that part of, the some kind of a support that we need and this understanding. And this is why we do these forums of education is that it's okay. And money does get lost. I mean, values go down, stock market goes down and it goes back up. I mean, there's so many different ways, right?
Oh, yeah, it does.
The duration, right? Like the duration. And so with all of that, the last thing I'll say, and I know we have a couple questions, and Julie, I learned this from you, the philosopher Maimonides, who said that the highest form of charity essentially is to invest. And I think about venture investing as a form of impact and not philanthropy in the traditional sense. But if I'm investing with women who are GPs that are investing in women businesses, I am changing the fabric of society. And that is impact for me. And so, yes, I want that to do well. And I want it to 10x and all those good things. But I know that money has been intentionally put towards something that makes greater change, because when we empower business owners, especially women, to succeed, then everything changes long term, right? The future begins today with those actions. And so that's how I think about venture.
Yep, it's your guaranteed ROI no matter what else happens. I always love a guaranteed ROI. That's a guaranteed ROI.
I really am passionate about founders and venture and investing. And I'm passionate about founders because they do create impact, period. There's no but, there's no nothing. They create jobs, they help the economy, they create the world we live in. And if it wasn't for founders, we'd just be big corporations. And there's nothing wrong with big corporations. They all have their own venture arm and they're all investing in venture as well. But founders, to me, to be able to go and put up a sign and say, I'm selling lemonade, I'm selling a widget, and not know the next day whether you're going to get a sale, even in building technology, building a product, it takes bravery, it takes risk. And I love to support that because I feel that is impactful to the whole world and to our lives every day. So
and Tracy, those big corporations are not solving the problems of menopause or, other solutions that women need solved. That's part of the issue as well. We need a diversity of people solving the problems that are affecting each of us. And it's not, there's gaps in the market, which is that's the big win for all of us. When somebody hasn't solved the problem we have, You think about menopause as an example. When do you have the most disposable income you're ever going to have? Right around 50 when you hit menopause, because your kids might be grown up, and it's before you're really preserving assets and living off a fixed income. How dumb of us not to have a whole bunch of good products in the market for menopause, because we could spend, finding relief during that period of time. That's where I'd spend plenty of money just to feel more comfortable and get through my day more in a better way. So, I actually think there's a great question here from Rose. Would you guys mind if I take?
Oh yeah, I was going to say like that. Rose's question is great.
Yeah, Rose, thanks for asking that question. All right. It, like a lot of things, it all depends. There's lots of ways into venture, but really, truly, the best way into venture in leadership or decision making is actually working in industry as an operator and having a track record of expertise and knowledge about how companies are run, about how to build products and get them to market. That is invaluable. That said, if you really are trying to help support a young person in their career trajectory, I would say, one of my analysts on my team is a CPA, and she worked at Deloitte in management consulting using her CPA and doing auditing. That's a path and we hired her as an analyst, and that's a great pathway in to a venture firm. So I think anything where there's like deep analytics skills where you can, evaluate them, and do modeling for the companies. Every venture firm has to do that. And most founders and CEOs who've sold their company and go to be a general partner at a venture firm aren't necessarily the modelers. They're the growers, and they hire the modelers. So there's a couple different.
I have to agree there. Having a financial background is always helpful. I mean, I came from the investment banking side, but having an understanding of business and being part of a business, whether it's one of our venture partners came from like Hewlett Packard and Visa and big businesses, but they saw how it was growing, and now they're in the venture space because they see what's coming and what's needed. But it's also important if you're working in a family business and you're building a multi-generational business, you see from bottom all the way to top. And so what businesses need to grow. So you can come into venture at any point, because remember, these are businesses, and they're starting businesses to the seed round, to the Series A round. And these are just different rounds as to whether they have revenue, don't have revenue. So coming any way on a perspective from a company and your experience brings so much to the table in venture. It really does, across the board, even on the marketing perspective as well.
So Audrey put a question in the chat about a website for venture firms or research platforms, and AdaPia put in as a response. I think some people can't see everything in the chat. The link to the How Women Lead New Table campaign. We actually curated a list of 40 women-run venture firms that you can get to know them on that platform. So there's a lot of different ways that you can slice or dice venture firms, because there's thousands of them. So I think that might be a good start to at least start to understand the language and the type what's out there in the world.
Yeah, wonderful. Thank you. Yeah, and we'll include that link too in the follow-up email that goes out to all the registrants. And and so we don't have, unless anyone has any more questions, maybe we can do some closing remarks, and then we're going to tell you a little bit about, speaking of fintech, a new financial technology that Women of Wealth has partnered with for our members. So maybe we'll just pass it to closing remarks. Tracy, we'll start with you, and then Julie.
Yes. So as you heard, I'm very passionate about venture. I'm passionate about founders. And if I can leave one comment with regards to whether you invest directly with founders or invest in funds, it's really important to know who you're investing in and with. So to me, I think the people and the value system that they bring is most important. Yes, you want to be, if you want your money to accelerate more quickly, you should be in areas that there are faster exits. Like I said, fintech, potentially climate change. It depends on where they are in the development. So I think that's important. Product development is great, maybe further along in the design phase. So depending on where you want and how quickly you want an exit, I think it's important to look at the different areas, decide, hey, I want to invest in climate change, or I want a fund that does investing across the board in different firms. I think that's important. But number one is to pick people you want to work with and that you can see yourself that they're going to keep your money safe as best they can. Obviously, you have a pandemic, you have things like that. They can't control that. And I think that's the most important thing. If I can leave anything, and just jump in, because it's worth it to be able to see how these businesses grow. And I think there's a great opportunity in the marketplace now. And I feel very fortunate to be able to be part of, growing this business for women, and understanding how important it is to really just jump in. So that's, if I can just leave that. And thank you, of course, Jennifer and AdaPia. Julie, it's been great to be on this panel with you. Love to be with, dynamic, intelligent women that are doing so many great things in the world.
Thank you, Tracy.
Well, so thank you, Tracy. And one of the things that you just said, I just want to underscore, which is get in early. You guys have heard this about investing in the stock market, right? You just got to get in. You just have to start playing in the game. And I think the earlier, even if you take little toe dips, there's one fund that I know about that's got a $10,000 minimum investment. Mine is $25,000 and it's spread over 4 years. So it's $6,250 a year. Like, just make sure before you delay and think that it's not going to be right for you till you have $1 million, right? There might be some smaller steps and entry level things that you can do early on, or just take a couple classes. Just start to educate yourself. And the other thing I'd like to encourage all of you to do is talk to 10 friends. Just start exploring it and start to build your knowledge base. Encourage them over phone calls, have brunch with 10 friends and talk about it. Everybody, do a webinar together and then talk about it. We just have to start women having conversation. It is hurting us. It's hurting the jobs of the future. It's hurting the solutions for all of us and our wealth and power and influence if we aren't playing in the game. So at least give yourself and your friends, the people you admire, the gift of starting to look into it so you can put on your roadmap and figure out when it's right for you.
I love that. Thank you.
So quick, one of the last thing I want to say is I was at a coffee house in Westwood near UCLA, probably, 8 years ago. And I walked in and I said, what kind of milk do you have? Like we all do. And they went through the whole list and then they said oat milk. And I said, oat milk. And then I turned to my husband and I said, I wonder who's doing that oat milk, because that company is the company that's going to take off. Sure enough, it was that company that took off. But what I'm saying is there's opportunity for venture everywhere. Every business you go into, every idea you see, that's how critical thinking starts, even if you don't start investing. So I encourage everyone to think every business you walk into, every experience you have, is to start critically thinking about, wow, is this a business? Is this a future? Is this something I want to do? So I'll leave it at that.
I love
that. And the critical thinking and having sounding boards is exactly what we're facilitating in WOW. So for any of you who've had a really, hopefully fruitful learning here today, we want to encourage you to look into joining WOW as a supporting member if that's something that calls to you. We are automatically working with Leadership Global members so that you have a 10% discount for joining from Leadership Global into WOW. It's only $500 and it's a tax-deductible donation to be in our community. And we do exactly the things that we've talked about here. We use each other as sounding boards. We talk about brass tacks financial questions, not in general terms, but in specific terms. And we support each other and we lift as we climb. We move each of ourselves from literacy into fluency, into mastery. Together, it's a beautiful partnership. We love that we work with Leadership Global. And we're so excited to announce that on another enterprise level collaboration, since there's so much demand, this beautiful platform called Questus has offered to allow us to steward access to their app, which is normally only available through employers. If you join WOW as a supporting member, you automatically get the Questus app, which is this incredible fintech tool. It provides you with live coaching for free, unlimited access to coaches, personalized coaches, community coaches, a chat forum, all kinds of touch points that help you look at the 360 of your financial picture, way beyond your stocks and bonds. It covers everything from risk management over to debt and budgets. and it leads you all through it step by step in the most accessible way. So we are so pleased to announce that when you join WOW as a supporting member, you not only get your 10% discount if you're coming through Leadership Global, you automatically get the Questus app so that you can start on your own financial journey wherever you are and start to elevate.
I just want to say I'm a member of WOW and I love that word. So that's the pitch.
Yeah, and you can check out, I'm sure in the chat Dana's put it, but you can find our website there if you're interested. Dana will pop it in the chat. And we do just want to share the closing remarks. And AdaPia, if you want to say anything before I do that, please feel free.
No, I mean, I think this is great. Just a huge thank you. So grateful to be in the company of other women who are really moving the needle. We could not do this alone. And it's really true that when women get together, we make massive, massive change. And we're not, no one's going to put this genie back in the bottle. She's not going back in.
No, she knows her power now. So you can't take that back from her.
Love it. Love it.
So join us every month for Wealth Mastery for Women. It's a thought-provoking discussion about financial strategies, tools, products, and practical takeaways for building a healthy financial foundation and generational wealth that's aligned with your goals and values. Make sure you're registered for next month's session. And if you'd like to learn more about the supportive and trusting community of women in leadership all over the world, just reach out to us or Leadership Global, and we will be really happy to see you come into the community.
Hey, thanks, everyone.